Good afternoon, dear colleagues. It is my pleasure to welcome so many talents with passion to build a digital, innovative, cashless society and to be one step ahead in European Union. I am Anna Pavlowska from a very cozy and beautiful city, Vilnius, in your neighboring progressive Lithuania. And my topic today is innovative digital platforms in cashless society. And I wish to start from the beginning, precisely how it could have happened in Lithuania. Fintechs and neobanks is a unique industry which has a unique set of requirements. Companies in all industries need talented teams and business-friendly conditions. But fintechs need even more than this. They need regulatory environment that proactively encourage innovation and close-knit communities where know-how and capital are shared and invested. In addition to that, in the borderless internet environment, fintechs need the international connections that will help them rapidly enter new markets. And locations which boast all of these features, skilled talent, innovation infrastructure, progressive regulation, local support, and strong international connections are few and far between, and Lithuania is one of them. The rapid growth of the Lithuanian fintech ecosystem, we may go to the slide number 1. Thank you. The rapid growth of Lithuania's fintech ecosystem began back in 2016. Since then, annual growth has hit 40% in some years and an average 30% per year. Over 220 fintechs operate now in Lithuania, and it is expected to exceed 250 by the end of 2020. The Bank of Lithuania, which is the central bank and the regulator in Lithuania, ranks among the most progressive regulators internationally. Guided by the principle of being a partner, not merely the watchdog for the financial sector, regulator has proven record of ensuring an innovative, conducive regulatory environment. In cooperation with other public authorities, Central Bank has successfully managed to combine regulatory flexibility with the highest risk mitigation standards, making Lithuania one of the leading jurisdictions to establish and scale fintech business globally. Regulator offers help and guidance to potential market participants via its newcomer program. This is one-stop shop program is specifically designed for new entrants to the financial sector who are considering acquiring the license. The newcomer program allows investors to check whether their plans are in line with legislative and regulatory requirements. Over the past 3 years, this opportunity has been taken up by over 400 participants from more than 60 countries. Regulatory sandboxes and other initiatives enabled Lithuania to be ranked as number 11 in the global ranking of ease of doing business out of 190 countries by the World Bank, number 4 position in the global fintech rankings by Flexible, this is Global Fintechs Index, and Vilnius, the capital of Lithuania, is ranked number 1 in global ranking for tech startups by FDI Attraction Index. And a number of state bodies were involved in this success story of building a progressive fintech ecosystem. That is, various ministries, state agencies like Invest Lithuania, MITA, the Bank of Lithuania, and the ecosystem itself. Among the progressive sandboxes, it is worth mentioning LB Chain, which is a blockchain-based technological sandbox developed for the use of fintech companies. It aims to accelerate the development and application of blockchain-based solutions in the financial sector. It is the first platform of its kind in the world run and developed by the financial sector regulator. Regulatory sandbox allows existing and potential financial market participants to test their financial innovations in a live environment. under the guidance and supervision of the regulator. Participants are selected according to certain eligibility criteria like genuine innovation, consumer benefit, the need for testing in a live environment, readiness for testing, and the ambition to provide financial services in Lithuania and all over the world. Other examples of the sandboxes which succeeded in Lithuania are crowdfunding, equity funding platforms, which enable to avoid intermediary chain for investment and lending, establishing the direct connection between the investor and fundraising company. And we may go to the next slide. InsureTech is another example, peer-to-peer platform which connects persons to collectively insure some kind of risk. And in case there are no risk event, the invested money are returned to the community. GovTech and RegTech are another initiatives enabling modern and online reporting the data to the regulator, from where the regulator selects and forms reports in the breakdowns it needs. The Bank of Lithuania is also a member of the Global Financial Innovation Network, which provides support to firms wishing to test initiative financial products, services, or business models across international markets. The Lithuanian Central Bank was also first in EU to issue CBDC, Central Bank Digital Currency, which had a big event last year. And Fintech related risk mitigation is high on the list of priorities in Lithuania. The regulator is building a novel framework for addressing risks posed by the provision of digital financial services, striving for risk-based and near real-time, insight-based supervision. More attention is being devoted to the cyber resilience of licensed fintechs, while the application of RegTech solutions opens opportunities for gaining new, more timely and precise insight on potential market risks. It has also reached out to the public and private stakeholders via initiatives such as AML Prevention Center, aiming to facilitate dialogue between authorities and market players, while supporting the law enforcement. We may go to the next slide. Now, the digital platform called Centrallink is another platform which is created and operated by the regulator. This is an access to SEPA payment system is available for fintechs. It provides open and direct access for all types of PSPs, meaning EMIs, PIs, banks, credit unions, and other institutions licensed within entire European Economic Area, together with a safeguarding account option. And the system shows remarkable growth over the recent years. Among 130 plus participants already are participating in this system. And there are such unicorns, European unicorns like SumUp, Revolut, Neum, TransferWise, TransferGo, as well as local fintech veterans like Paysera, local and EU-based banks. So what are the benefits of this digital payment system? Payment institution license, e-money institution license, or credit institution license issued in European Economic Area is eligible to participate in Centrallink. It gives one integration, one access to 3 SEPA schemes, SEPA credit transfer, SEPA direct debit, and instant payment schemes. Instant payments represent a new trade in EU, with payment processed from original payer to the final beneficiary in maximum 20 seconds. The amount of each payment originally started from 15,000 euro and now has been increased to 100,000 euros. With the spread of smartphones and electronic commerce, the digitalization of the economy entails a general acceleration of payments. And customers make internet purchases anywhere at any time, including during evening hours, weekends, and holidays, periods when most traditional electronic payments are not operational. Suppliers, on the other hand, want the certainty of being paid as soon as they sell their goods and services. An instant payment scheme fulfills these expectations. Several European countries plan their own solutions to the challenge of rapid payments. The problem, these national schemes would have stopped at national borders, creating a fragmented European landscape. They would have slowed the further harmonization of payments in Europe, and one of the building blocks of the single market. At the same time, when harmonization of direct debits and credit transfers had finally been achieved in SEPA. So instant payments operate without weekend, cut-off time, holidays in 24/7 per 365 regime. And it shows a remarkable growth of 800% year on year in Lithuania. And we may go to the next slide. Another innovative initiative in Lithuania and all over Europe is Proxy Lookup service scheme. It's a mobile payments accelerator. Proxy Lookup service scheme was launched last year. The aim was to enable mobile payments between different PSPs. Scheme represents database where IBAN is tied to a mobile phone number or an email address. Other proxies might be added, like social network ID or company registration number or any other proxy upon the demand of the market. The Proxy Lookup service scheme was created to allow the exchange of data necessary to initiate mobile payments between proxy-based P2P mobile payment solutions. It facilitates the interoperability between participating P2P mobile payment solutions. The strategy was based on the linking of a mobile phone number, proxy, or an email address to an IBAN. Initially, focus was on mobile payments, where the mobile phone number is used as a proxy to the international bank account number. After that, on the demand on the market, the scope of the proxy was raised also to an email address and possibly to a social network ID upon demand. So how does it work? The client links his IBAN to his mobile phone number on the mobile app. The PSP submits the information on the linkage to the PLS database. The record is kept in the database until the new record related to the same mobile phone number or IBAN is sent to the database. The old record is deleted. Once the client of PSP initiates mobile payments, the PSP sends the request to the database, asking to provide an IBAN linked to the indicated mobile phone number, and receive the response. Knowing the IBAN number, PSP initiates instant payment. And we may go to the next slide. So other trends on the market, I have showed here the GAFA, the 4 biggest American technology companies, which has won both the respect and the dread of the business community. Respect because their vision and technological capability they constantly demonstrate has taken the world steps forward and affected the life of almost every human being. And dread, on the other hand, because as a market share leaders, when they show interest in new industry, they are capable of disrupting it and become within a short time a dominant player in that market too, while causing their competitors either become obsolete or significantly shrink as a consequence. And in the recent years, all of them have made their moves into the financial industry with specific steps in the payment sector of it. Google Pay and Apple Pay are the digital wallet solution that's supposed to offer a seamless payment experience by Google and Apple respectively. They act as an added interface layer between the shopper to the payment provider that uses the customer's credit or debit card under the hood. It is used online or in-store C2B transaction or to perform C2C peer-to-peer transaction for passing money to friends and family. Their advantage to the users in online payments is by providing a better user experience for quicker checkout process. It is achieved since the card data is stored in Google's, Apple's, or WeChat or other PayPal accounts, and the user doesn't have to retype it again. It is also tightly adjusted to the device that invokes it. And last, it is considered more secure process, and it uses issuer side tokenization for the card, as well as strong authentication that is structured as a part of it. Well, as I mentioned, these products don't disrupt the existing business model of the payment chain, but coexist with the current payment chain model. However, they do provide alternative solutions for some existing payment services, and hence, in case of massive adoption of these wallets by online shoppers, will impact the current payment ecosystem and reduce some of these services' revenues for payment providers. The long-term goal, let's say, of Apple aims for from its current step is to get into position that for its customers, all the payment process are managed by Apple. All the other players that involved in the payment process, from the issuer to the card network, are just processors and are hidden under the hood. And in the future, near or far, if it will be required, those players could be replaced, while the customer will remain loyal to the frontline interface, like Apple. Amazon has aggressively invested in payments infrastructure and services over the last few years. Its flagship product, Amazon Pay, functions as a digital wallet for customers and payments provider for both online and brick-and-mortar merchants and shoppers. Amazon provides those services not only for the use of sellers for the largest online marketplaces in the world, Amazon website, but also for other merchants who sell through their own standalone e-commerce sites. For them, the benefit for using Amazon is to let their customers who has account in Amazon enjoy a seamless payment process. So Amazon is having a direct competition in the payment industry with the rest of the PSPs and can slowly increase its market share towards becoming one of the leading players in this vertical too. Amazon has become a provider of many other financial services that all could be provided to its potential customers that may enjoy one-stop tech-savvy shop. In this position, Amazon is a real threat on the payment and finance existing players that could only increase its momentum in the recent future. Other method is QR code payments. QR code payments are extremely popular in Asia. Precisely in China, Hong Kong, Singapore, you may find QR codes not only in the physical stores, e-shops, but also on the streets. Private sellers are using QR codes to sell their homemade goods, or even homeless people have QR codes for donations on the streets. Multiple devices might be used for QR code scanning and payment, like bracelets, smartwatch, glasses, finger rings, etc. In Sweden, for example, there is ID chip implants. They implant them into hand, which enable not only to identify the person, but also to lock and unlock the entrance doors to the office and home, and to pay for tickets, trains, or other small purchases. In Lithuania, QR codes were very used by such fintechs like Moku, Paysera, where QR code scanning was used as a payment method for purchases in e-shops, physical stores, cafes, and restaurants. Accommodation service providers. However, this kind of solution failed to be proven in Lithuania. And finalizing, I am glad to be part of innovative community and to build together digital society for the benefit of all of us as end users, when we may purchase, pay taxes, and at a fair price, quickly and conveniently. And this is it from my side. Thank you very much.